Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. We are in dangerous waters right now. Silver prices are in dangerous waters. Right now, the gold to silver ratio is 104 to 1. The highest it's ever been. Ever. This is a market crash that we're going to be reading in the history books. I'm telling you guys, this is serious. Right now, we see silver at $14.54. It's actually lower than that. We see platinum at $752, down only $15. But the one that's shocking right now is gold is at $1,517, down 3.82%, down $60. And we even see palladium almost the same price as gold. When we saw a $2,800 palladium, now palladium's at $1,751, down $132 or down 7.25%. Things are getting serious. What do you think is going to happen? Can silver get any lower? Or are we going to see $13 silver? Are we going to see $12 silver? Are we going to see $10 silver? Where are these prices going? COVID-19 is causing people to run around like a chicken with its head cut off. And this is getting serious. Right now, I have an article from Seeking Alpha talking about gold, bank holiday next. The bank holiday is next. Most markets have an equilibrium based on supply and demand. What drives the market to extremes is speculation. But not even always about speculation. The U.S. Mint ran out of American Eagles. They ran out of coins. The U.S. Mint literally said, we ran out of coins. We ran out of silver. So there's a back order on those. Bullion, Provident Metals, APMEX. There's such a large order, such a large demand for physical silver that they're expecting you have to wait several weeks for your order to even be shipped. It said, Bullion said 5 to 10 days due to such a large volume of orders that we cannot catch up with. This is not a game anymore. This is not all fun and games. This is getting serious. They're shutting down schools. The U.S. just announced a cutoff from all other countries. Europe, cutoff. UK is the only they're the only country that's allowed to come over right now. But they're putting a temporary ban on visitors, and this is something that we saw coming. But I don't think people could speculate how severe things are getting. So, with a lot of risk, also can come a lot of reward, right? If you see this incredible volatility in the market, the only thing I can say, or if you see this as a positive thing, only thing I can say is keep the emotion out of your trading. And this is something I talk about a lot. There is so much speculation, so much emotion that is attached to the markets right now. The only thing I can say is try to take the emotions out of it, look at the markets realistically, and then you can have rational decision making. The worst thing to do as an investor is to be basing your choices off of emotions. That's where impulse buying, panic selling, and irrational judgment comes into play. Most people are going to be selling their silver right now, panic selling, thinking it's going to go lower, selling themselves short when the price will correct back upwards, especially looking at a gold to silver ratio that is the highest it's ever been, meaning that it's silver almost has to outperform gold at this point. But not only that, we have stock markets. The U.S. stock market has now wiped out the entire $11.5 trillion value it's gained since Trump's 2016 election victory. Wow, that speaks for itself. Extreme volatility equals extreme opportunities. Like I said, where there's a lot of risk, there's also a lot of reward. So the link to this article from Seeking Alpha will be in the description. Most markets have an equilibrium based on supply and demand. What drives the market to extremes is speculation. Recently, the speculation has been driven by fear based on COVID-19. People who have been in the market for a long time, who just got into the market recently at the top, are now nervous. The back of the bull market in equities has been broken, so now the market has to prove itself that this isn't a bear market. There's a lot that's going to be coming along the next following couple weeks, or a couple days, couple weeks. This is going to determine for the rest of the year where silver could be sitting. And we really don't even know how much more COVID-19 has to grow, which is even scarier to think about. So, it needs to identify these levels based on supply and demand, where people are willing to buy. When we get some volume and it exceeds the selling pressure, then you'll see it in the price. That's the trigger point, buy one or buy two level, which is the trigger to buy. See, they have this AI, this artificial intelligence trading bot. It's called the VCPMI. So this is what they're talking about. So the VCPMI day trading program shifts to higher fractal in price when the market price closes above the sell to level. Most technical systems or programs are not able to adapt when the markets go to extremes. The VCPMI adapts by creating a new 5-level structure based on the weekly numbers when a market reaches the extreme levels based on the daily data. If you see this incredible volatility in the market, the only thing I can say to you is to keep the emotion out of your trading and look at the incredible opportunities that these gyrations create. If you get involved with the chatter, if you get involved with the news out there, it's going to be very confusing because nobody really knows what's happening. It's all speculation. It's he said, she said, this is what could happen, this is what should happen, but nobody knows what's going to happen. The coronavirus was the black swan that pretty much took the band-aid off the system, exposing the truth to our real debt, our real problem, the $24 trillion in debt that the U.S. is. How we're using our system based off of debt to try to get ourselves out of debt, like trying to pay off a credit card with another credit card. So, we are now beginning to smell the rotten system that we've been dealing with since the 2008 recession. The violent volatility is basically the transfer of wealth from the weak money to strong money. What you saw in the last couple of weeks is equity markets and in the metals markets are basically weak money people that should be in the market who are afraid, panicking. We're dealing with an environment that requires patience and objectivity, not emotion, which is one of the reasons why I think the VCPMI automated algorithm works because it deals with volatility in the markets, not the emotion, which is a really good point. This robot cannot deal with speculation. It looks at the hard facts, and that's what I try to get you guys and gals to do when you're investing as well. The more volatile the market becomes, the more accurate you'll see the VCPMI signals. Annual gold numbers. Using the VCPMI, on September 30th, 2019, we calculated that the annual targets for the supply and demand for the 2019 to 2020 season. In the reports, we pretty much calculated the sell one level at $1,655. This was when the market was at the $1,506 level. The report told us that the 9-month average price was $1,550. For the VCPMI for the year, $1,417 is the mean for the year starting September 28th. Reports also told you, based on calculations, that the sell one level is $1,655. Now the sell two level is $1,803. We made $1,704 as a recent high, so we completed the first target. So they're talking about, what that's going on with where the VCPMI is telling the price target ranges, all that, level 1, level 2 buy opportunities. So now let's look at this. So extreme volatility equals extreme opportunity. So markets are reacting to COVID-19 with an unprecedented fast market. Gold is down $50 to about $1,592, which is actually down lower now. The NUGT is in a fast market. The market seems tremendously oversold, so we might find some support down here. For gold and silver, we could be looking at a clinical support down there. And this might be the bottom. Money appears to be coming back into the ETFs. It's difficult to make sense of what's going on given the volatility in reaction to see what's happening in Italy. Travel bans, such as related to the coronavirus, if you have position open, you are not on the margin. That's not a good position to be in. So taking the emotion out of the market, it seems that the $1,580 level for gold seems to be the target for this move. The numbers appear to be coming to a level where the market is moving into an area with increasing probability of finding buyers. And that's true. The lower these prices go, the more appetizing the markets look to get in, because you can get in really cheap. It's like a huge discount sale for precious metals. See, the U.S. stock market has now wiped out the entire $11.5 trillion value was given since Trump's 2016 election victory. The market was down 3%, $11.5 trillion of wealth has been wiped out. I don't know what the administration needs to do to alleviate the panic that has afflicted the market. Trump is certainly not providing any confidence. The prices in the market are reflecting the lack of leadership or confidence. There's discussion of a government emergency fund of $40 billion for businesses to access discount loans to get through the current coronavirus crisis. Part of the problem with the market is that many people do not know how to use leverage positions. It's great to use a lot of leverage when the market's going your way. For triple X ETFs, some investors took margin on leverage ETFs, which I think is completely crazy. It's asking for trouble. When the unexpected happens last month, there was massive liquidation of highly leveraged instruments. Every voter who voted for Trump is now rethinking their decision. This is an incredible economic and political development. In one administration, we'd have to see record highs and now a bear market in the stock markets. I believe that we're going to hear something come out of the administration or Europe that will help. Europe has agreed to purchase $120 billion euros each month in stimulus. Until the U.S. administration does something, we are going into a really confusing time. The volatility is going to be unprecedented. So we really don't know where this could head. This could be extremely confusing for a lot of people because nobody knows what's going on, and we really have to just let it play out. Now let's go into silver. I try to focus on the technical work we do. The $15.60 level area should hold silver market. The NUGT is one of the instruments we trade aggressively and has come down 40 as of February 24th with a 50% discount on the ask. It's primarily reflected by the collapse of the market. It has been affected as a share. In relative terms, gold is holding very well. Percentage-wide, gold is solid. The only thing that needs to happen is the stock market needs to find some buyers coming in, which is now, I think things are getting much worse since this article was written because things are down a lot more now. So it's talking about the VC PMI again. Now, there's high probability that the market may revert. The weekly gold average price is $1,647. The extreme below is $1,601. The buy to level is $1,530. I'm waiting for the price to get back above $1,601 to activate a buy signal above. In terms for the futures contract for day traders, the weight of the algorithm is to activate the trigger point. When the price closes above $1,601, you activate a buy trigger. The trigger for conservative traders is to wait until the 15-minute bar closes. If the market closes above and activates a buy signal, it defines you automatically where the top is. So, it's talking about this. You're talking about the U.S. dollar. There's a summary. Let's read the summary. So the equity markets are looking for something more significant from the federal government in terms of stimulus package of some kind. Until it happens, this volatility is going to continue. When we look at gold, it's offering an incredible opportunity as a potential hedge for what's coming and what the damage has done. We are about to turn a corner on gold and wait until we act as a risk asset and as a hedge. I would look at silver too. Gold and silver are beginning to adjust their spread relationship. We can see silver lead the way. With expected cycle, it will put a bottom in gold and silver the next day or two at any time. It's a great opportunity. Use it to change your future. I love that last part. Use it to change your future because there is a lot of opportunity here, guys. When you're buying at such a low price and things are so extreme, we really could see $100 silver over the next couple of months. Especially with this, could be the icing on the cake that really does give that oomph that needed. Especially since the gold to silver ratio is so high, I'm looking at silver more in perspective. So, anyways, I'm gonna wrap this video up here. I don't like my videos going too long, but anyways, I'm curious what you think about this. I know it's a lot of information, but what's your overall perspective on this? Where do you think these prices are going to be heading? Also, what do you think the gold to silver ratio means? Do you think that silver is going to start outperforming gold, or do you think that the ratio could go even higher? What do you think about all this? I'm curious to see where you think prices are headed. I definitely think things could go down a little more, go south a little more before it corrects back upwards, but remember, it always will go back upwards. You don't need to worry about that part. Anyways, I'm going to wrap this video up here. The link to this article from Seeking Alpha will be in the description. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.